If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
There's an issue cutting through the partisanship in Congress. It's AM radio. The overwhelming majority of legislators, Democrats and Republicans, support a bill to keep AM radio in cars. But time is running out. Text AM to 52886 and ask Congress to bring this bill to the floor for a vote now. AM radio is too important to let this moment pass us by.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
This is WBNW 1120 AM, the Money Matters Radio Network. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston, the Money Matters Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutsky from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about estate tax reduction and asset protection strategies that can help reduce or eliminate your estate taxes. Todd, there have been major changes with the Massachusetts exemption amounts. What is the new exemption for the state? Does that mean that a married couple living in Massachusetts with $4 million in assets could eliminate their estate taxes?
So, yes, there has been some changes. Now we're almost a full year in, of course, heading into a second year into the change. The change is now $2 million. It used to be $1 million for estate tax exemption. Now it's up to $2 million. And yes, if you are married, but you actually do trust planning, you can shelter $4 million. But folks, that doesn't mean that's all you do. For folks with $3 million that want to eliminate taxes, we can do that. But we can also think about protecting assets from the cost of long-term care. It allows us to do both a little easier now with a higher estate tax exemption. So think about ways in which you can use the irrevocable trust to not only shelter and be able to reduce your estate tax by sheltering up to $2 million on the death of each spouse, but also starting that important 5-year waiting period running to protect those assets from the cost of long-term care.
The law firm of Cushing & Dolan have been helping families like yours for more than 40 years. Request your copy of Todd's brand new guide. It's called Balancing Asset Protection and Avoiding Estate Taxes. You can call 866-848-5699. That's 866-848-5699, or you can request the guide from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
The Financial Exchange and Veterans Development Corporation are proud partners of the Disabled American Veterans Department of Massachusetts. The DAV provides thousands of hours of voluntary services at our VA medical centers and is the only DAV department in the country to lead a veterans housing initiative for single veterans and for those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit davma.org. That's davma.org.
Financial planning is a year-round job, and with 2024 coming to an end, now is the perfect time to take a hard look at your strategy and what changes you may want to make going forward. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide may help you understand some key numbers that could affect your planning next year. There are many important topics to review, like marginal tax brackets and retirement account income limits. If you're retired or getting ready to retire, the guide also focuses on the many ways that the government taxes your Social Security benefits. Take the time now to reflect on your current strategy so you can be fully prepared for any adjustments you may want to make in the future. Get your copy of our new guide, Key Numbers to Know for 2025, by calling 800-393-4001. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
As a busy mom, my to-do list is full.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has information to help you and your family live a healthier life.
Visit goredforwomen.org/momlife today.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Paul Lane.
Fed Day here on the Financial Exchange. As a result of that, we're going to spend the first hour of the show talking about the Mortgage Bankers Association Mortgage Market Index, because we can't, we're going to do the Fed. So in any case, you got the Fed. They are going to be announcing their interest rate decision at 2 p.m. Along with that, we also get what's called the Summary of Economic Projections, or the SEP, as it's commonly referred to in the biz. And then at 2:30, Jay Powell puts on his finest purple tie and tells us, hey, all you people out there, we may have cut this time, but don't think you're getting any more. Got it?
No more cuts for Christmas after
Got
this
it?
one.
No more cuts, only coal from Jay Powell from here on out. Santa Powell's unhappy with you. You've been getting too happy in the markets, and inflation's higher than we'd like. And so the way to get inflation down is to put coal in stockings.
That's a pretty good summary. I think that's what he'll go with. No, I think largely what I would anticipate this afternoon, as I was thinking about this morning, is obviously we're going to get the cut. And then you would imagine that a lot of the messaging from Jay Powell is going to be very Scrooge bah humbug of this idea that, hey, don't expect this to continue on at this pace, to temper market expectations as to what we look at for Fed cuts coming in 2025. And then also we'll get some data behind that. So we won't just have to parse through his words very carefully to try and figure out what the messaging is. In addition, as you mentioned, we'll get the summary of economic projections. In particular, one piece of interest will be that dot plot update in which 12 of the members will list out what they anticipate for cuts in the upcoming year. And that will be, information that we'll look over. Obviously, this is always a moving target, so it's not to say anything that they project is set in stone, but it's helpful to get a sense for what they're thinking at the moment.
Yeah, it is. And look, I'd rather get a SEP every 2 months than 46 Fed speakers every week.
Yes, I would agree.
I don't need all the speaking. Just tell me what you think is going on and what you think is going to happen. I don't want to have to be parsing, whether Jay Powell said a hawkish the or a dovish and. I just want to know, hey, do you think you guys are doing enough now or not? And then back to where you came from.
Numerical evidence would be a lot easier to go through than trying to go through what is always going to be a very measured speech that any Fed chair is giving when they're out in public that has caveats attached to it.
Yeah, it's just how the thing is set up at this point. But this is an important juncture because you've had some warmer inflation readings again for the last few months, and quite honestly, I'm going to throw some cold water on them because I think this market has it wrong. And I think this market has it wrong because I'm not just going to be like, oh, I think it has it wrong because the economic data that had turned up in September, October, November is now starting to turn again. We got, just as an example, this morning, building permits and housing starts for the month of November. Permits actually show good growth, up 6%. And the reason why is like every real estate developer after the election is like, pulling the permit just in case I need it. Housing starts dropped another 1.8%. We're now below 1.3 million units annually on that side of things. And that's concerning on one level. But the piece that I come back to on this is one that I've never brought up before, but it was tweeted out by Connor Sen, who we covers pieces from Bloomberg Opinion from time to time. He does a good job with the
real estate market.
And here's the thing. If you look at real estate units under construction, not real estate units, but housing units under construction, they peaked in July of 2023 at 1.7 million. Today, we're at 1.434 million. And, Paul, can you have a completion without a start?
No.
You can't. So if you're now only starting 1.3 million on an annualized basis, there's more room to go down. And if you look at the last, let's see. The data set I have here goes back 55 years is how long we have this going back to January of 1970. That's when they started this. Each of the drops that we have seen in residential units under construction in the United States over that time period has eventually led to recession. Now, I'm not saying it's going to happen next week, next month, or anything along those lines. But if you want to tell me, hey, it's different this time, you got to tell me, okay, like, why? Because, sorry, I just threw my pen. I got so excited. If you look at this, housing always, no, I'm good, Paul. I don't need to write. I'm using a computer. I don't even know I'm holding a pen. It just like gives me something to
emphasize your point. Drive it home.
Yeah, I'm
Chuck likes to click pens. I don't know if you noticed that.
I'm a clicker. He's
a big clicker.
Mike's just abuse it and demolish it.
You see a pen that Mike's had for 10 minutes and you're like,
yeah,
my goodness.
That pen grip didn't stand a chance.
It's been inside a nuclear reactor. But the point I'm making on this is, why would this cycle be any different? And it's not that you're seeing like a ton of recessionary data out there right now. You're not. The only place where there are any kind of concerns are on the labor market, and even that's kind of like, we'll watch it and see what happens. But the decline in housing units under construction is continuing to accelerate. And given that, my question is, hey, how do you end up seeing growth if one of the main growth engines in the U.S. is contracting? Is it just like data center construction? Everyone who was doing drywall moves into, putting in sprinklers for data center? No,
Are you talking about the economic growth in totality, like the GDP growth?
Yeah, where's it come from? Because
it's been the consumer. It's been on the backs of the consumer, right?
It has
so
been.
If you want to make the counter argument, I guess it's the resiliency of the consumer. How long can that go on for is a fair counter to that. I mean, we've seen consumer spending levels, I think 3.5% growth year over year, and the numbers there. How long can that go on for is a fair point, but that would be the counter, is the resiliency of the consumer. But it's getting long in the tooth how long you've leaned on the consumer to keep spending for.
It is. Like you're at a pretty good clip there in terms of, what we've seen historically. And so it's just one where, again, I'm mentioning this stat not because I think you're going to go into recession in January or February or March. Maybe do, maybe don't. Like, who the heck knows? I'm saying it much more because when you have data that is starting to cool, and this is some of it, by the way, like this is, again, just one set, and this one's been cooling this one's been cooling basically since March, so like the last 9 months. But you start seeing like other pockets that are cooling, and you go, look, the reason why economists believe that raising interest rates kills inflation is because it eventually induces a recession that gets people to just be happy with a 2% raise, and pricing, goes away from companies in terms of them having pricing power because people can't afford it, and people get used to lower price increases as opposed to higher ones. So, I don't know. I'm going to poo-poo the last few months of inflation data and say it's more similar to Q1, which was an outlier, than anything else. And I'm not sure that it means anything. And, yeah, I think that the Fed doesn't need to either hike or cut at this point necessarily. Like, I think that there's an underpriced probability right now that the Fed might just sit tight for like 6 to 9 months.
I could see that.
Because they don't need to do anything,
Right.
and that's fine.
Right.
Sometimes doing nothing's the right thing to do.
Do you have any issue with the cut today?
No.
I don't either.
No.
Okay.
No, like not going to hurt, not going to help. It's just, it is.
It's 25 basis points.
And quite honestly, I said this the other day to Mike. I'm like, if Jay Powell really wanted to take what is a completely unwarranted victory lap in framing this as like, hey, we're going to pause now, he could say, look, by successfully front-loading 50 basis points of cuts in September and then doing smaller ones now, we've accomplished what we needed to do in order to support the labor market, and now we can pause instead of having to continue on.
Speaking of victory laps, it's been a really good year for the Fed if you look at just how things have played out. You really can't beat them up too much.
No.
You certainly could on when they started cutting or raising rates, rather, but you really can't beat them up over the last probably year and a half or so in terms of how things have gone and in the way that they've acted.
Let's take a quick break here. When we come back, okay, yeah, let's touch on this. How is this Fed cut, or expected Fed cut, going to actually impact your wallet? We'll tell you that right after this.
Business and financial news affecting the markets and your wallet. We've got it all, straight from Wall Street, right here on the Financial Exchange Radio Network.
Financial planning is a year-round job, and with 2024 coming to an end, now is the perfect time to take a hard look at your strategy and what changes you may want to make going forward. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide may help you understand some key numbers that could affect your planning next year. There are many important topics to review, like marginal tax brackets and retirement account income limits. If you're retired or getting ready to retire, the guide also focuses on the many ways that the government taxes your Social Security benefits. Take the time now to reflect on your current strategy so you can be fully prepared for any adjustments you may want to make in the future. Get your copy of our new guide, Key Numbers to Know for 2025, by calling 800-393-4001. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Protect your assets and avoid tax consequences by getting Cushing & Dolan's new guide called Balancing Asset Protection and Avoiding Estate Taxes. You'll learn how to keep your assets away from the nursing home while potentially eliminating your estate taxes. Get yours today by calling 866-848-5699. That's 866-848-5699. Or request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way, so whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. With the holiday season approaching, now is a great time to say thank you to our great American heroes by making a donation at dav5k.boston. Your gifts will support services such as the Veteran Advancement Program, which offers permanent and affordable housing opportunities for veterans and their dependents. Thank you again for your support. The DAV5K Boston is presented by Veterans Development Corporation.
So the Fed's expected to cut rates or cut the Fed funds rate by 0.25% later today. How does this actually affect you and the money you have, or the money you may want to borrow, dare I say? First, places that it's not going to affect. If you have an existing fixed rate mortgage, nothing changes because it has that word fixed rate in it. If you have an existing adjustable rate mortgage, if you are coming up on the period in which it starts adjusting, this could potentially impact it because most adjustable rate mortgages are based off of either the Fed funds rate. They could also be based off the prime rate. And the other one that they're typically based off of is what's known as the SOFR rate, the Secured Overnight Financing Rate, SOFR, not SOFA, but SOFR. SOFR. I don't know. So it's typically one of those, and those tend to be pretty well correlated. So if you do have an adjustable rate mortgage that is coming up on an adjustment in January, as an example, you may see, a 0.25% lower than it would have adjusted to otherwise. Credit cards. Typically, credit card rates adjust as of the next billing period, and so you might see a 0.25% lower interest rate if you have a balance outstanding there. Other than that, are there any other areas that we may see some impact for actual human beings on this?
Money market and CDs is another place. Those are really, particularly the money markets, those move pretty well in conjunction. Within a week later, you'll probably see the impact on your money markets, and certainly the short-term CDs will be impacted as well. That would be the other area to hit. One thing on the credit card side of things, they're usually, the credit card companies, they do move them down. They're just a little slower to react. It seems like I had read some reporting where when we had done the 50 basis point cut back in September, card ratings survey, cardratings.com did a survey where they gauged where the credit card companies were in terms of dropping their rates at that point, and they only saw an average of 0.13% drop in correspondence with a 0.5% round of cuts that we saw in September. So they can always be a little leery and perhaps extending the profit margins a little further to drop those rates.
Now, when we look at, basically anything else, remember the Fed does not control long-term rates or anything along those lines. So if you are, as an example, thinking about buying a 10-year U.S. Treasury, the Fed is not exercising direct control over that market at this point. Really, they don't exercise much direct control over those rates. They might decide to buy up some bonds, but they don't specifically target interest rates across the yield curve. So that's not stuff that they control as part of this. So again, the Fed interest rate cut here. Remember, the Fed's now cut 0.75% since September. During that time, the 30-year fixed-rate mortgage has gone up 0.8%. Mm-hmm. So just because the Fed is cutting rates does not mean that you are going to see it show up in mortgage rates, just as an example there. Piece in the Wall Street Journal that I don't agree with entirely. 2024 has been a year of extremes in the stock market. Can it last? And I guess the only extreme that we've really seen, well, I guess there's a way that you can get to this. This has been one of the calmest years in market history from a volatility perspective. So it's been extremely calm. You don't normally think of that as an extreme. And you've really seen this continuation of the last few years where if you haven't owned the S&P 500, basically nothing else is keeping pace, whether it's domestically with small and mid caps, whether it's international stocks. It just has been this continued S&P 500 dominance, and it seems like you're getting a lot of people kind of throwing in the towel on that and being like, yeah, like just invest in the S&P and you're good. And I caution people because that's kind of what they were saying about emerging markets back in the early 2000s. It's what people were saying about small caps in the 70s, 80s, and 90s. It's what people were saying about the NASDAQ in the late 90s. So I kind of look at this and, yeah, I'm certainly not saying like, hey, don't invest in the S&P. That's not the message. But it's much more the things that do well for 3 to 5 years, it's tough for them to maintain that outperformance indefinitely. And just understand that when you're looking at the market.
Fair point to make. I do think that it's very interesting to follow just what's gone on with small caps in general, where for a long period of time there was this theory that you needed small caps in your portfolio. And I'm not saying that anything has changed with that, but I am interested in just the components of the small cap market. It seems like have changed greatly from where they were back when a lot of this data was put together, the 70s and 80s and 90s, where I think you've had a couple interesting dynamics where the size of the private market has doubled over the last decade, where there's a lot of good companies that can stay private for longer. And if you think back to the history of companies like Facebook or Microsoft, some companies that have just been tremendous in terms of their success, they were really prompted to go public because they hit 500 private shareholders and were going to have to start disclosing their financials to the SEC. So they just said, screw it, we may as well go public. That threshold since has been raised to 2,000. So it's allowing for companies to stay private longer. And then you also have a larger private capital market. And as a result, the amount of profitable companies or high quality companies in the Russell 2000, the percentage of them that are losing money is a lot higher than they were back in the 90s or 80s. And so just an interesting demographic shift. Does that lead to under or outperformance? Who knows? But it's just interesting how it's changed, over time.
It is. So again, I think the thing I come back to on a lot of this is the stuff that you just described in terms of, small caps versus large and some of the other stuff that we were just talking about. Sometimes these get put into thinking as, hey, these are hard and fast rules, when really, hey, they may have been true for 5 years or even like 35 years. Like, they could be true for an entire investor's career, but maybe that investor just operated in this unique period where it happened to be true instead of it being, undoubtedly true as, gravity. And it's what happens in markets is not, it's not physics. I say that a lot, but you have to be ready for conditions to change. And I think that's the big thing that you always need to keep in mind when investing. Quick break here. When we come back, we got Wall Street Watch. Then we're joined by Todd Lutsky for Ask Todd.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Heads up, athletes, coaches, and parents. Play for life, not just points. Hypertrophic cardiomyopathy, or HCM, is the leading cause of sudden cardiac death, especially in black athletes in sports like football or basketball. If you feel shortness of breath, chest pain, and fatigue, or have a family history of HCM, talk to your doctor. Don't let HCM bench you for good. Learn how to stay in the game at heart.org/HCM student athlete. Your heart, your health, your move.
Protect your assets and avoid tax consequences by getting Cushing & Dolan's new guide called Balancing Asset Protection and Avoiding Estate Taxes. You'll learn how to keep your assets away from the nursing home while potentially eliminating your estate taxes. Get yours today by calling 866-848-5699. That's 866-848-5699. Or request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
The Financial Exchange and Veterans Development Corporation are proud partners of the Disabled American Veterans Department of Massachusetts. The DAV provides thousands of hours of voluntary services at our VA medical centers and is the only DAV department in the country to lead a veterans housing initiative for single veterans and for those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit davma.org. That's davma.org.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way, so whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Key Numbers to Know for 2025. Mike, when it comes to 401ks and their contribution limits, 2025 is a little bit unique in that it is the first year of the super catch-up limit.
It is, yeah. So there's a brand new contribution excess amount that you can put into your retirement plan, but only for a very specific window. You must be between the ages of 60 and 63 to participate in this special super catch-up contribution, according to the Secure Act 2.0. And so there's a little bit extra that you might be able to put in if you fall into that age demographic.
So how much is the normal 401k max? How much is the regular catch-up? And then how much is the super catch-up?
Yeah, so for the normal 401k contribution limits, the most that you can put in 2025 is going to be $23,500. If you are over the age of 50, you can do an extra $7,500 into that 401k. And then finally, if you just happen to be in that narrow band, you can do an additional $3,750 catch-up contribution on top of everything else that we already went through.
Folks, our guide this month is titled Key Numbers to Know for 2025, and this is just one of the numbers that's included in it. We also have discussions about IRA contribution limits, tax brackets, a whole bunch of different things that are included in here. How do you request the guide? Call 800-393-4001. That number again to request the guide is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are relatively quiet, edging higher as Wall Street awaits the conclusion to the Fed's final monetary policy meeting of the year, where it is widely expected the central bank will make a quarter-point interest rate cut. Fed Chairman Jerome Powell will hold a press conference this afternoon at 2:30. Right now, the Dow is up by 0.4% or 195 points. S&P 500 is up by nearly 0.25% or 13 points, and the NASDAQ is up by 32 points so far today. Russell 2000 is edging 4 points higher. 10-year Treasury yield is up by 1 basis point at 4.40%. And crude oil is up just over 1% higher, trading just below $71 a barrel. General Mills shares down by 3% after the maker of Cheerios and others trimmed its outlook for 2025, citing uncertain consumer demand, where it now expects adjusted earnings per share to fall between 3% and 1%. Despite the outlook adjustment, the cereal maker did beat quarterly expectations. Meanwhile, electronics components company Jabil posted stronger than expected fiscal first quarter earnings and guidance, while also lifting its full-year revenue and EPS guidance. That stock jumping by 8%. After 4 consecutive losing sessions and entering correction territory, NVIDIA shares rebounding by 4% today. Elsewhere, Baird downgraded electric vehicle startup Rivian to neutral from outperform, citing few catalysts in 2025 and lower EV sales expectations. Rivian shares down by 4%, and after today's closing bell, we'll see earnings from Micron Technology. That stock so far today up by 2%. I'm Tucker Silva, and that's Wall Street Watch.
This is Ask Todd on the Financial Exchange Radio Network. If you have an existing estate plan or are in the market for one, Todd Lutsky is here to answer your questions and help you plan for later life. Ask Todd is presented by Cushing & Dolan, serving Massachusetts and New England for more than 35 years, helping families with estate and tax planning, Medicaid planning, and probate law. Visit CushingDolan.com. Now, here's Todd Lutsky.
And we are now joined by Todd Lutsky from the law firm of Cushing & Dolan. The segment is Ask Todd. You get to ask Todd your estate planning questions live on air. Last week, I think we might have set a new record, Todd. Did we do 4 or 5? I can't remember.
It was every bit of that. It was. I can't tell. I think we did get to 5.
And we still left 1 on the board just because, again, we were a little filled up with callers. So get calling early in order to make sure we get to your call. 888-205-2263. More often than not, we don't have a chance to get to 5 callers. But again, 888-205-2263. That is the number to call to speak with Todd Lutsky right now live on air about your estate planning questions. One more time, 888-205-2263. Todd, how are you today?
I'm never better. I'm afraid to ask you how you are.
I'm good. I learned something new over the weekend.
Yeah? Well, that's good. You're always learning.
Did you know that Sweden puts barcodes on their naval ships?
On their naval ships?
On their Navy.
No, I didn't know that.
It's so they can Scandinavian.
Well, that's good. That would work.
It would, but I said there's no way that happens.
No, that's very true. There's no way.
And so finally, I said, look, let me know when they finish. Then mark them as all completed.
Oh, that's cute.
I thought so.
That works.
Todd, let's talk a little bit about state estate taxes.
State estate taxes.
Not federal, but
Got it.
state estate taxes. Let's say that someone has done trust work. They have a revocable trust, multiple ones, and or irrevocable trusts.
Okay.
If someone moves from a state that has no state estate tax into one that does, how do they know if the trust planning they've done adapts for the fact that their new state might have an estate tax in it?
So, great question. The reason that Chuck is, directing it to be state, because first I'll just say federally, of course we know, federally in every state is the same. So that's why we're not ignoring federal, but we are, discussing the state. Federal will be covered. State, first and foremost, what do you do when you move? You check with a local lawyer, right? Now, we are licensed in a lot of states, so a lot of our clients can just call us when they move, because there are a lot of things you need to do when you move. It doesn't just mean you move and everything works. So you gotta make sure that you call. They would call us and talk to us if we're still licensed in the state. If not, you find a local lawyer who's licensed in the state and ask. However, make it a little easier on some of you. I believe, I don't have the exact number, but I believe there's only about 15 states that even have an estate tax. So right off the bat, the answer might be pretty easy. I don't have to do anything, right? So like a lot of clients from here move to Florida, right? Well, Florida has no estate tax.
Sure.
So they don't have to worry there's no estate tax. Now, remember, when I do planning for clients, or when we at Cushing and Dolan do planning for clients, we always make sure, like if they're already a Mass resident, that we've got the shares built into the trust that are needed to shelter estate and federal estate tax. So lots of times what I see is a client will move to Florida, they're all set. But if they move back to Mass, they would also be all set because it got the state language in it. And that happens a lot. Usually you have one, the family moves to Florida, one spouse dies, they're alone, they want to come back to where the kids are if they're here in Mass.
Sure.
And they move back. So, we have to account for that. So that's the first thing. Check with someone local. Secondly, when you are moving, if you really want to change your residency to take effect and make sure that the reason you're moving is to not be taxed in the state that you left, there may be some other steps you need to take, from maybe updating your basic estate planning documents, not the trust, but the will, the healthcare proxy, the power of attorney, the basics, so that they are that state specific. Change your driver's license, voter registration, use your credit card down there when you're whatever location you're living in, so that you can prove that you're there 6 months in a day. So a lot of other things to think about when you're changing residency, in addition to, as you said, Chuck, updating your estate plan, at least the basic docs.
Talking with Todd Lutsky from Cushing and Dolan. Still some room on the phone lines here at 888-205-2263. Call that number to speak with Todd live on air about your estate planning questions. We are going to take a break now, but when we come back, we're going to get right to those questions from you. Again, that phone number is 888-205-2263. One more time, 888-205-2263. Quick break, then right to your calls with Todd.
Ask Todd with Todd Lutsky every Wednesday at 10:30. Only here on the Financial Exchange Radio Network. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way, so whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Financial planning is a year-round job, and with 2024 coming to an end, now is the perfect time to take a hard look at your strategy and what changes you may want to make going forward. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide may help you understand some key numbers that could affect your planning next year. There are many important topics to review, like marginal tax brackets and retirement account income limits. If you're retired or getting ready to retire, the guide also focuses on the many ways that the government taxes your Social Security benefits. Take the time now to reflect on your current strategy so you can be fully prepared for any adjustments you may want to make in the future. Get your copy of our new guide, Key Numbers to Know for 2025, by calling 800-393-4001. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutsky from the law firm of Cushing & Dolan with your Financial Exchange Quick Tip of the Day. And today, we're talking about estate tax reduction and asset protection strategies that can help reduce or eliminate your estate taxes. Todd, there are some high net worth clients that would like to reduce the size of their estate, but they don't want to give up access to their assets. Is there anything they can do?
There certainly is, folks. So this is a combination of things. One, you obviously want to do your basic estate planning first. Get your foundation in place, the basic revocable trust planning to help utilize whatever exemptions you don't use up through gifting. Now, when we talk about reducing the estate, we are talking about gifting. But as you said, they don't want to lose control. So there are these special trusts that are designed called spousal lifetime access trusts, where in essence, you use an LLC to keep control of the investments, manage the investments, and make distributions. And then the non-voting shares get put into these irrevocable trusts where you have each other's spouse has access to the assets. So there's a way of getting the assets into those irrevocable trusts, which are now growing outside of your estate tax-free, while at the same time working together to keep control and use what's in those trusts.
The law firm of Cushing & Dolan have been helping families like yours for more than 40 years. Request your copy of Todd's brand new guide called Balancing Asset Protection and Avoiding Estate Taxes by calling 866-848-5699. That's 866-848-5699, or you can request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. You're listening to Ask Todd with Todd Lutsky on the Financial Exchange Radio Network.
Still got a little bit of room on the phone line, so if you do have a question for Todd, 888-205-2263. Must be a little slower because of the Christmas holiday coming up next week. Again, 888-205-2263 to speak with Todd. We do have a caller all queued up for you right now, though. Let's go to Steve in Centerville. Steve, what's your question for Todd Lutsky?
Yes, I have a question. I had a house put in a Medicaid non-revocable trust, done the right way.
Okay.
There's a mortgage on the property. Say the house is worth $1 million and they owe about $300,000. At some point in the future, after the trust was set up, you pay the house off. Does that $300 start a clock on that money that you paid the house off with?
That's a great question, and the answer is absolutely not, right? But let me explain. The way the Medicaid clock works is you transfer the property in, however long ago that happened, and when the day you transferred the property in is the day you started that 5-year Medicaid clock. Okay, so that's step one. The only time that Medicaid clock resets or starts over would be, let's say you added something to the trust after you put this in, something new like money, or you had a spare brokerage account and you wanted to protect more assets, so you added it to the trust. That would reset the clock, but only as to the new addition. It would not at all reset the clock on the house. Another comment we get all the time is that, and you might be thinking this down the road, Steve, what if you sell your house through the trust and buy another one inside the trust? Again, no restarting of the clock as long as out goes the house, in comes all the money from the proceeds, and then you use those proceeds to buy the new house inside the trust. You see, nothing new went in. All that happened was you reinvested the assets that were already in there. So that didn't restart the clock. And finally, the reason it doesn't restart the clock for your mortgage is that mortgage was never owned by the trust. That mortgage was in your name alone, or you and your wife's name alone if you're married. And so you are using money, I assume, outside the trust to pay off a mortgage of your own that is outside the trust. So that transaction never impacts the trust at all and doesn't reset the clock. Now, I'm going to leave one other comment for everybody else out there who's listening, because, Steve, you kind of know this. But Steve's situation, I'm guessing, had the mortgage on the property before it went into the trust. So if that's the case, always be mindful when you're setting up these trusts that the transfer to the trust could trigger a due on sale clause on the mortgage. That's why we would always reserve a life estate in the deed if you have an existing mortgage. That's how you could keep that mortgage, Steve, even though the property was in the trust. But the one issue is you probably couldn't refinance it without resetting the clock. So anyways, long-winded answer, but it's a great question. It's one that comes up, and I'm sure a lot of people have it. So, folks, let me now tell you a little bit about, that's Medicaid, that's the irrevocable trust. The guide we're giving away this month has both the revocable trust and the irrevocable trust addressed in it. I say addressed in it, but how? It's going to explain to you how, with a revocable trust, the marital share, the remainder share, how they work, how the formula works to shelter estate taxes on the first death. Gives you an example. Tells you could put your own numbers in and run it through and see how you shelter your taxes. Tells you how to calculate the tax. It also does the state tax. So it gives you the new Massachusetts estate tax calculations in there. And finally, for all of you who want to do tax planning and nursing home planning, there's another example, but it's with the irrevocable trust, explaining similarly how those things are done. So something for everybody. It's that time of year. Call and get the guide, 866-848-5699 or legalexchangeshow.com. One more time, 866-848-5699 or legalexchangeshow.com.
Todd, let's talk a little bit about the current state of affairs for the federal estate tax. I know that after next year, that is currently set to drop back down to what's the level for 26?
So for 26, it's supposed to drop back down to $5,490,000. That's the drop back, indexed for inflation. So it's the indexed for inflation part that we're not aware of.
Sure.
I'm guessing we seem to think that other professionals have been guessing. That's going to move it to about $7 million. So, but go ahead, Chuck.
Are you hearing anything through the grapevine in terms of the likelihood of what ends up happening with the new administration coming into office and a Republican-controlled Congress as far as, hey, are we likely just to see a continuation of the current level with its inflation adjustments? Do you see the federal exemption expanded again? What's kind of what you're hearing out there in terms of possibilities, at least?
Yeah, no, and that's a great question. It's a fair question because that's what we're faced with, right? And so there's a couple of schools of thought. Initially, when the election was over, it clearly looked like a red wave had hit, and so we're like, okay, we need to adjust the way we're going to pursue 2025, and for higher net worth clients, for aggressive gifting or not. We said we might need to tailor that back, slow it down a little bit, because we were thinking that the likelihood of them changing or not acting to prevent this from happening. Remember, folks, this is going to happen unless they act. Okay, so that's a given. So we said, well, likely maybe they won't do that. Then about a month into this now, what are we, a month and a half into this thing, we're starting to realize that the red wave was there, but not so much in the House of Representatives as we once thought. Fair? So that now is about, what, is it one, maybe two votes?
Republicans going to afford to lose two and still pass something.
So it's about a 2-vote difference now, which is very different than I think what we were looking at as possible in the teens at one point. So with a 2-vote difference, that now makes us rethink this exemption resetting once again. In other words, now, as far as I know it, right, the Constitution requires that any tax legislation, or what they call revenue-generating legislation, must start in the House. So it's very possible that it may never find its way to the Senate if it can't get out of the House. So now with a tight situation like that in the House, yeah, I think you got to keep your eyes open to this possibility of resetting to $7 million. As we all know, the debt is pretty high. We got deficit spending. We've got to be careful, and they need revenue. So,
have you heard any chatter about the exemption amount increasing, or is it just, hey, you're just not sure and you're just trying to read the board at this point?
Well, I when you say increasing, I mean it's obviously scheduled to fall back, not increase. But
yeah, I'm asking about the opposite. Yeah,
I know. I think the best you can hope for would maybe be for the legislation to stay the same, and maybe then continue with its indexing for inflation every year like it has been doing, because it's going to jump to 13.9.
Sure.
In Jan. So those little incremental I think the best you could hope for is stay the same. I don't think you're going to be able to say, oh, all of a sudden we're going to now ramp it up and have a much higher estate tax. So that's my thought.
Mr. Lutsky, thank you for joining us today.
Always a pleasure. Thank you.
This has been Ask Todd on the Financial Exchange Radio Network. Ask Todd with Todd Lutsky has been presented by Cushing & Dolan, serving Massachusetts and New England for more than 30 years, helping families with estate and tax planning, Medicaid planning, and probate law. Call 800-393-4001 or visit CushingDolan.com. The views expressed in this segment are solely those of Cushing & Dolan. Armstrong Advisory does not provide any legal or tax advice. Please consult with your legal or tax advisor on such matters. Cushing and Armstrong do not endorse each other and are not affiliated.
Bunch that we have to still get to today on the show, including a major merger being discussed in Japan. We'll also talk a little bit about daylight savings time because, man, love talking about that. Gotta be honest with you. And then we'll also talk a little bit about the latest potential front in the trade and economic conflict between the U.S. and China. We'll cover all that and more in Hour 2 in just a little bit today.
Are you over the age of 50, want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much, and they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network. Protect your assets and avoid tax consequences by getting Cushing & Dolan's new guide called Balancing Asset Protection and Avoiding Estate Taxes. You'll learn how to keep your assets away from the nursing home while potentially eliminating your estate taxes. Get yours today by calling 866-848-5699. That's 866-848-5699. Or request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
The Financial Exchange and Veterans Development Corporation are proud partners of the Disabled American Veterans Department of Massachusetts. The DAV provides thousands of hours of voluntary services at our VA medical centers and is the only DAV department in the country to lead a veterans housing initiative for single veterans and for those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit davma.org. That's davma.org.
Hi, this is Chuck and Mike from the Armstrong Advisory Group. Our guide this month is titled The Key Numbers to Know for 2025. Mike, one of the questions that we get asked quite often is, how much can I gift in any given year without having to file a tax return or pay any tax on it? What does that number look like for 2025?
Yeah, there's a tremendous amount of confusion about this, Chuck. I think there's a lot of folks who assume that when you give a gift or receive a gift, there's taxes due at the time. And that is almost never the case unless we are talking about tremendous dollar amounts.
Sure.
In 2025, the gift tax exclusion amount is going up to $19,000 from $18,000. That means that you can give up to $19,000 to any individual without having to file the special return of a gift.
What about if I am trying to make a gift in conjunction with a spouse? How does that work in terms of what we're able to do?
Yeah, I mean, you're able to double it immediately, right? So that $19,000 gets doubled. Keep in mind, too, that these are the gift tax limits per individual. And so you have seen people say, okay, I'm going to gift money to my son, my daughter-in-law, their 3 children, and in each of those cases, if you are married, that could be $38,000 per person without even have to file a tax return.
Our guide this month is titled The Key Numbers to Know in 2025, and it covers these numbers and a whole bunch more that can help you optimize your financial plan. We also have discussions about IRA contribution limits, tax brackets, a whole bunch of different things that are included in here. How do you request the guide? Call 800-393-4001. Again, that number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John. Visit one or all 3 and enjoy the vacation of a lifetime. Each island is special in its own unique way, so whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS back taxes or you haven't filed in a while, the tax relief line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to 0. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to 0 due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
Heads up, athletes, coaches, and parents. Play for life, not just points. Hypertrophic cardiomyopathy, or HCM, is the leading cause of sudden cardiac death, especially in black athletes in sports like football or basketball. If you feel shortness of breath, chest pain, and fatigue, or have a family history of HCM, talk to your doctor. Don't let HCM bent you for good. Learn how to stay in the game at heart.org/HCM student athlete. Your heart, your health, your move.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Paul Lane.
Hour 2 of the Financial Exchange is underway, and we're continuing to get closer to Senor Powell telling us what the Fed is going to do on the Fed funds rate today at 2 p.m. We'll have plenty of time to recap that as we as we get into tomorrow. But the expectation is that we are going to see a 0.25 percentage point cut, and then all eyes are going to be on the Fed and Powell in terms of, hey, tell us what you think is going to happen with the Fed and your policy in 2025. Taking a look at markets as we head towards, well, we're actually past the top of the hour. We're just kicking this one off. The Dow is up 190 points, so potentially breaking that 9-day losing streak. Looking to avoid 10 days in a row of losses. I don't know when the last time is that the Dow saw 10 days. Actually, no, I do see it here. The last time that the Dow saw 10 days in a row in the red was an 11-day slide in 1974. So you got to go back 50 years to get there. The 9-day losing streak, by the way, is the longest since 1978. So we'll see where this puppy goes after Powell speaks. S&P 500 also up 0.25%, 16 points, and the Nasdaq up 64. So a little bit of a bounce back happening today. I know that the last couple weeks it's been like, hey, Tesla's up another 20% and Broadcom's up 40%. And everything else is down is kind of how it feels like. The S&P as a whole has been so boring for the month of December. It opened the month of December at 6,040. It reached a high of 6,099, less than 1% above that open, and has bounced in between for the entire time. The range is less than a 1 percentage point on the S&P 500 for the month. It's been really, but it's been 30 points up one day, 30 points down. So just kind of 0.5% in either direction is what we've been seeing for equities, at least for the S&P. The NASDAQ, which is heavier in Broadcom and in Tesla, has done well. And things like the Russell 2000 and Dow have done horribly. If we take a look at the 10-year U.S. Treasury, up 1.4 basis points to 4.399%. Oil making a little bit of a rebound today, up $1.04 to $71.12 a barrel on West Texas Intermediate. AAA national average for gas prices up another 0.4 cents overnight to $3.03 4/10. And we've got gold today down $7.50 an ounce to $26.54 50 cents. Some big news making waves out of Japan, though, and what we are seeing here is a potential merger between Honda and Nissan. Give us the lay of the land, Paul.
So what we're looking at here, Chuck, this would be a proposed merger, like you mentioned, of Nissan and Honda. It's also been rumored that Nissan would bring in Mitsubishi Motors as well, as Nissan is the top shareholder of that company. That would create the third, if they were to merge, this would create the third largest auto manufacturer behind only Toyota and Volkswagen, and annually that would be equivalent to about 8 million sales in terms of what we're looking at from a vehicle perspective. Why is this being proposed? They're really just getting their lunch taken from BYD in China, and we know largely, or it's rumored, is it rumored, or even do we know that they're fully subsidizing, the Chinese government is heavily subsidizing BYD as an EV maker?
Well, let me ask you this, Paul. Do you think that you can make a long-range EV for $10,000?
Do you think you could buy a plug-in hybrid for $7,000?
Probably not.
Likely not. So anyway, you get the gist of where I'm going with that. They're trying to make inroads in those markets, which it's just astounding, Chuck. If you look at the numbers of sales that Nissan and Honda had in China just 5 years ago. So 5 years ago, 1/3 of their global vehicle sales were going to China, one of the largest auto markets out there. Since then, you're half of where they were 5 years ago in terms of the sales that they've seen in companies like Nissan and Honda. 3 of 5 cars in China that are purchased are domestic. That's the highest it's ever been. And also, if you look at what the Chinese are buying in terms of car, more than half of their new cars are either electric or plug-in hybrids. So Nissan and Honda find themselves in a really difficult place where they're competing in the electrical vehicle market and the hybrid for what was 1/3 of their market share, but it's just being totally absorbed by China and BYD in terms of the subsidized offerings that they have. So they find themselves in a place where strategically this looks like the best bet. Now, you have many hurdles to clear to even try and get this through. Both being Japanese companies, they're very concerned that this would lead to substantial job cuts if these two companies were to merge. And there's just been a lot of impacts and waves made from China and its presence in the EV market that bleeds over to GM as well as here in Japan.
So I think the China issue is part of it. I think the other part is, quite honestly, Nissan is dying in the U.S. Nissan reached, and this is from Nissan's own data, they reached 1.6 million vehicles sold back in 2017 in the United States. The most popular models were the Nissan Rogue. Like the Rogue was kind of the, I don't want to say the original, but like it was basically the RAV4 and CRV before the RAV4 and CRV turned into what they are. I mean, the RAV4 and CRV used to be a lot smaller than they are today, and the Rogue kind of paved the way for them. Since then, and the only data that I have is through 2022. I don't have 23 full year Nissan sales in the U.S., but they went from 1.59 million vehicles in the U.S. in 2017 to 730,000. It's a 54% decline in a 5-year period. So Nissan is absolutely getting its lunch eaten in the U.S., not by BYD or like SAIC from China, because
we don't have to worry about that here.
They're not being sold in the U.S. at this point, but rather they're getting their lunch eaten by every other manufacturer in that SUV space, specifically the small SUV space, and they've had a litany of quality problems in recent years. And so that, I think, is another problem where they're not competitive at this point on their own, and they can't get to the scale that they need to get to in order to basically be able to survive, I think, given the capital demands of the auto industry. The other company that's probably, that I wouldn't be surprised if they end up heading this way as well, one that's near and dear to my heart, which is Subaru. They're just not that big of a brand, but you know, they've already got some integrations with Toyota. They're licensing some technology from them and working on co-developing some platforms. So it kind of feels like it's almost a matter of time before Subaru ends up getting absorbed into Toyota. It feels like it's heading in that direction as well. In terms of the largest brands worldwide, Toyota in 2023, you mentioned them, and Volkswagen. Toyota did 10.3 million vehicles last year. Volkswagen did 9.2. Hyundai is currently third at 7.3. Stellantis is at 6.4. General Motors 6.2. SAIC from China at 5 million. Ford at 4.4. Honda, Nissan 4.1 and 3.3. You do the math, okay, that gets you to the third biggest, as you mentioned. Suzuki from Japan. I know that no one really thinks about Suzuki here in the United States. It's too bad. Do you guys remember the probably like mid to late 90s, they had that little runabout vehicle that was kind of like the RAV4 or the Jeep Wrangler?
Yep.
It was like, I just remember the colors were wild. It would be like white, and then it would have like bright blue and pink racing stripes on the side of it, or it would say like 4x4. But just absolutely wild.
X90?
I don't even know.
Looks like it.
Is that what it was called?
In the 90s, right? Is that what you're talking about? You see them all the time.
No, the Suzuki Sidekick is the one I'm thinking of.
Oh.
The Sidekick, I think, is it. And what's this one here? Hang on. There's another one that I'm looking at right now. Oh, no. This is another. Wow, there's so many great ones.
They all look the same.
There's so many great ones from the 90s. Do you guys remember the Isuzu Amigo?
Oh, yeah.
It's another one that's kind of in the same boat there, like really tiny, kind of boxy little SUV. That's another one that
yeah.
You're right. They all do look very similar in terms of model.
They all do. I was skiing out in Utah when I was like 24, 25, and we didn't really have a ton of money beyond the lift tickets, and so there were 5 of us, and so we had to rent a car in order to get to and from the mountain because, again, didn't have enough money to stay anywhere close to the mountain. We rented it. It ended up being, it was the cheapest car we could find at the Salt Lake Airport. It was one of these Suzuki things from like it wasn't that old, but we somehow crammed like 5 guys into this with ski gear in order to make it work, and it was kind of comical making it work. But I digress. This merger between Honda and Nissan, I think you're going to be seeing more consolidation in the auto space because I don't think unless the China issue is a big one, just because so many of the sales from these other automakers were going into China, and now China's basically saying, okay, we've taken all the technology we want, now we're going to kind of run things ourselves, so thanks for playing. But unless countries want to push back on Chinese exports of vehicles to other countries, this is going to be a problem that comes for everyone, and the only way to potentially deal with it on that side is more mergers potentially. So it's something I think you might see more of. Quick break here. We got trivia coming up right after this.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network. Protect your assets and avoid tax consequences by getting Cushing & Dolan's new guide called Balancing Asset Protection and Avoiding Estate Taxes. You'll learn how to keep your assets away from the nursing home while potentially eliminating your estate taxes. Get yours today by calling 866-848-5699. That's 866-848-5699. Or request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Planning for later life is a year-round effort, and with the calendar about to change, there are several important numbers to understand as we turn to the new year. Hi, this is Mike Armstrong from the Armstrong Advisory Group. In our new guide called Key Numbers to Know for 2025, we'll discuss a variety of topics that may help you with your planning for the upcoming year. The guide focuses on many subjects, among them numbers related to retirement account income and gifting limits, Medicare Part B premiums, and marginal tax brackets, all of which are crucial to your overall planning strategy. Learn about how these numbers may affect your financial plan in 2025 by calling our office today at 800-393-4001. Ask for your free guide called Key Numbers to Know for 2025. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutsky from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about estate tax reduction and asset protection strategies that can help reduce or eliminate your estate taxes. Todd, there have been major changes with the Massachusetts exemption amounts. What is the new exemption for the state? Does that mean that a married couple living in Massachusetts with $4 million in assets could eliminate their estate taxes?
So, yes, there has been some changes. Now we're almost a full year in, of course, heading into a second year into the change. The change is now $2 million. It used to be $1 million for estate tax exemption. Now it's up to $2 million. And yes, if you are married, but you actually do trust planning, you can shelter $4 million. But folks, that doesn't mean that's all you do. For folks with $3 million that want to eliminate taxes, we can do that, but we can also think about protecting assets from the cost of long-term care. It allows us to do both a little easier now with a higher estate tax exemption. So think about ways in which you can use the irrevocable trust to not only shelter and be able to reduce your estate tax by sheltering up to $2 million on the death of each spouse, but also starting that important 5-year waiting period running to protect those assets from the cost of long-term care.
The law firm of Cushing & Dolan have been helping families like yours for more than 40 years. Request your copy of Todd's brand new guide. It's called Balancing Asset Protection and Avoiding Estate Taxes. You can call 866-848-5699. That's 866 866-848-5699, or you can request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. If you missed any of today's show, catch up whenever you want on our YouTube page. Find daily show segments and full shows. Just go to youtube.com and search for The Financial Exchange. This is your home for breaking business and financial news. This is the Financial Exchange Radio Network.
Another day of Christmas trivia here, taking you up to the holiday. Despite what Bruce Willis said on his Comedy Central roast, Die Hard is a Christmas movie. When the producers were casting Die Hard, virtually every male actor in Hollywood was approached to play John McClane before they landed on Bruce Willis. The first actor to turn down Die Hard was one of the stars of 48 Hours. Trivia question today: who was the first actor to turn down the starring role in Die Hard? Once again, who was the first actor to turn down the starring role in Die Hard? Be the sixth person today to text us at 617-362-1385 with the correct answer, and you win a Financial Exchange Show t-shirt. Once again, the sixth correct response to text us at 617-362-1385 will get that Financial Exchange Show t-shirt. See complete contest rules at financialexchangeshow.com.
Was it Timothy Chalamet?
Let me check. No.
Wasn't even born yet, I believe.
No.
I think he was born in like the mid-90s,
Yeah.
so probably not on that. Piece in the New York Times. The economy is finally stable. Is that about to change? So let me just take exception to the headline here. Economies are never stable in that, like they never like reach everything being good and then just stay there. They might get there briefly and then they destabilize and then they get back there and then they destabilize. It's kind of how they're always moving. And it's not so much that they're always heading into recession or not, but it's just something where, hey, like the economies are always in motion. They never get to a place where they're just comfortable and resting. They're always evolving. And so I think that the first premise of, hey, the economy's stable, I don't think matches with my lived experience. Your thoughts, Paul?
No, it's constantly evolving. I guess the argument, probably a better word than stable, is an iteration of 100 pieces that we've read and covered on the show over the last month or so. Like, hey, the economy's in a pretty good place at this point, statistically, looking at some measures.
But it's been that way for a year now.
But it's really about the crux of this piece is the same stuff that we've covered a million times. Is
good.
Who knows what the impact is going to be because of tariffs, immigration, and deregulation with Trump's presidency. I think that's really the piece with it. But I can understand the pushback on the stability part because it's never, you're never done, and you're never fully out of the woods on inflation. You know, all these other things out here. It's just at a point in time you like to see it trending in the right direction, but it's ultimately constantly evolving. I would agree with that.
By my math, we now have 33 days until the inauguration. So only 33 more days of endless speculation of, will it be this policy? Will it be that policy? I'm telling you, actually, let's move ahead to the next piece because it dovetails nicely. Should we make daylight savings time permanent? And this is being brought up here because President-elect Trump has said that he wants to eliminate daylight savings time. Elon Musk and Vivek Ramaswamy have said they want to make daylight saving time permanent. Here's the thing. I think I've actually figured out why people have trouble with daylight saving time. And there's two reasons. The first is no one knows whether it's the fall, whether it's like the fallback or the spring forward. Hint, it's the spring forward. The summer is daylight savings time, not what we're in now.
So the better time.
It's better because the sun stays out
no
more
kidding.
during the day.
Yeah.
The reason why people get upset is because they're like, oh, like I drive to work and it's dark. That's not because of daylight savings time. That's because if you're in the Northeast, it's only actually light out for about 9 hours a day in the winter. And that's not caused by shifting the clocks. that just determines like where it's going to fall. Like, is it going to be really dark starting at, 5 p.m. until, 8 a.m.? Or is it going to be dark from 4 p.m. until 7 a.m.? That's all you're determining. Like, you can't increase the hours of daylight in the day. That's caused by the fact that the Earth is tilted relative to the sun.
Well, you should look into that.
It's called the angle of insulation if you want to go and Google that and put it into your Wikipedia. And that's why we have shorter days. So you can't legislate out the suck of it getting dark for 15 hours a day in the Northeast. Like, that's just how it's going to be. And I can't believe that this is something that we're actually talking about in terms of wasting, like, legislative time on or Doge time on. Or, like, what are we doing here? Of all the problems in the world, daylight savings time? Really?
Top of the list.
I don't care what it is, but if you want more time in the sun, move towards the equator. The only way to do it. Or
you're about to collapse on air on this one.
No, I was eating some nuts during the break, and I got a nut stuck in the throat. And so, anyways, I just can't believe that there's an actual Bloomberg column now about, like, hey, the U.S. economy says that we should make daylight savings permanent. It doesn't matter.
Matters to me.
Which would you prefer, Tucker?
Whatever this is not.
So you'd rather have it not be light until like 8 a.m.?
Yeah. Yeah, I don't care. I'm up early. It's dark either way for me, so I don't care. Screw the rest of you.
Rational self-interest. Thank you, Tucker.
Hey, at least I'm honest.
Paul, what would you prefer in the winter?
I'm fine with the way that it's structured right now. You know what? Now having young kids, I'm going to say I'm with Tucker because that afternoon window post-nap for us is very difficult having very little daylight time.
I say if you're gonna do this, go bold. Make it stay light 3 hours. Make it always light at 7 p.m. Figure out how to make the sun go down at 7 p.m. every day.
Good for us working folks.
And we'll be there. Quick break, more Financial Exchange next.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
The Financial Exchange and Veterans Development Corporation are proud partners of the Disabled American Veterans Department of Massachusetts. The DAV provides thousands of hours of voluntary services at our VA medical centers and is the only DAV department in the country to lead a veterans housing initiative for single veterans and for those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit davma.org. That's davma.org.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Early estate planning is crucial if you want to protect your assets and avoid massive tax consequences. Cushing & Dolan are experts in elder law and taxation, and their new free guide can help give you just that. It's called Balancing Asset Protection and Avoiding Estate Taxes. In it, you'll learn how to keep your assets away from the nursing home while reducing and potentially eliminating your estate taxes. If you have an existing estate plan but aren't sure about your potential liability, or you need a new plan, call Cushing & Dolan today at 866-848-5699 and get this free guide called Balancing Asset Protection and Avoiding Estate Taxes. Don't leave your assets to chance. Call 866-848-5699. That's 866-848-5699. Or you can request your guide online from our website, LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way, so whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Key Numbers to Know for 2025. Mike, when it comes to 401ks and their contribution limits, 2025 is a little bit unique in that it is the first year of the super catch-up limit.
It is, yeah. So there's a brand new contribution excess amount that you can put into your retirement plan, but only for a very specific window. You must be between the ages of 60 and 63 to participate in this special super catch-up contribution, according to the Secure Act 2.0. And so there's a little bit extra that you might be able to put in if you fall into that age demographic.
So how much is the normal 401k max? How much is the regular catch-up? And then how much is the super catch-up?
Yeah, so for the normal 401k contribution limits, the most that you can put in 2025 is going to be $23,500. If you are over the age of 50, you can do an extra $7,500 into that 401k. And then finally, if you just happen to be in that narrow band, you can do an additional $3,750 catch-up contribution on top of everything else that we already went through.
Folks, our guide this month is titled Key Numbers to Know for 2025, and this is just one of the numbers that's included in it. We also have discussions about IRA contribution limits, tax brackets, a whole bunch of different things that are included in here. How do you request the guide? Call 800-393-4001. That number again to request the guide is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Find daily interviews and full shows of the Financial Exchange on our YouTube page. Get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Trivia question today was, who was the first actor to turn down the starring role in Die Hard? That'll be Nick Nolte. Some of the other stars who turned down Die Hard were Al Pacino, Robert De Niro, Don Johnson, Harrison Ford, Arnold Schwarzenegger, and Mel Gibson. Winner today of the Financial Exchange Show t-shirt was Ray from East Greenwich, Rhode Island. Congrats to Ray. We play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Paul, we got a piece here in Market Watch. It's titled, Forget the 4% Rule. Consider this new magic number for retirement withdrawals instead. Paul, what's the magic number for retirement withdrawals?
The magic number, according to a Morningstar new research report, is 3.7%. They said that
so it's a 3.7% rule now.
It's been modified slightly this year. That gives them a 90% probability that they'll have some money remaining at the end of a 30-year retirement. So basically projecting it out from age 65 to 95. If you are to withdraw 3.7% from your portfolio, so $1 million portfolio, you're pulling $37,000 a year. That will last you all the way out for a 30-year period. Why has it changed from the 4% rule? The 4% rule became popularized back in a study done in 1994 by William Bengen. It appeared in the Journal of Financial Planning, just basically this idea of what is the rate that you could withdraw from your portfolio over a period of time and not depleted. Why is it lower this year? Because Morningstar is using lesser assumed rates of returns going forward, because we sit at a period in time, as Chuck and I talked about on the show yesterday, where equity valuations are really high at this point. So they're utilizing lower assumptions for the rate of return in the future than they had in the past. And that's why you've seen the decline in the rate through what Morningstar had done from its recommended survey here.
Paul, do you think this is something, and I know that Morningstar is doing this saying, hey, like, we're looking at a 30-year period that begins now, but for someone who's, either thinking about retiring or, might already be retired, do you think they need to be, like, looking at their withdrawal rate each year and being like, what's the long-term sustainable one, or is it more adjusting just based on, hey, here's what things look like for, next year, and maybe I make some changes for that, but do I make any long-term changes based on it?
Yeah, for us, when we're working with clients, typically it's more, let's monitor the trend of your withdrawal pattern over a series of years, because it is just inaccurate to think that you're going to be able to stick rigidly to the same percentage every single year.
Sure.
There's going to be years where more expenses come up than others, whether it needs to be, work done around your house or a car or things like that. That's going to make the withdrawal rate change. So what I tend to focus on more so is sticking to an overall average that, hey, perhaps not every single year are you going to hit the 4%. Maybe some years it will be 6, maybe some years it will be 3, but you want to see that average coming in close to, between 4 and 5%, depending on the client, and objectives matter too. If you have no heirs that you're looking to leave assets to, some people might want to lean on a heavier rate of withdrawal.
Folks, if you're either retired or thinking about retiring in the next year or two, these are the questions that the Armstrong Advisory Group addresses each and every day with our clients. How do you make your money work for retirement? Number to call to schedule an appointment is 800-393-4001. We have offices all throughout the New England region. So, again, that number is 800-393-4001. If you're trying to figure out what retirement looks like for you, call someone who can take a look and walk you through some of the options that are out there. Again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
FTC out with a new rule that was made final yesterday, specifically related to service fees and other mandatory fees included in concerts, hotels, things along those lines. So think about when you go on StubHub or Ticketmaster and they tell you, oh, like your ticket's going to be $60, and you're like, great. Then you click on it, it's like, no, it's $90 because you got to pay a 50% fee on the thing. Or you're booking a hotel and it says it's $200 a night. And then you click on it and it says plus a $45 a night. What is it? An amenity fee or a venue? What do they even call them?
Like a hotel booking fee?
No, there's a specific word. It's a resort fee.
Resort fee, yeah.
It's like, well, what do you mean? It's like, oh, well, that's for use of, the pool and towels and this and that. It's like, well, what if I don't want to use those? You still have to pay to the resort fee. Oh, okay, so it's the price of the room. So look, in terms of how big of a problem this is, again, by the time you finally get to make your purchase, you're like 3 screens later. So I think no one's really... By the time you're actually putting in your credit card information, you know how much the full thing is going to cost. Mm-hmm. It still is kind of shady, slimy behavior that it's just being hidden from you in terms of, look, no one walks into 7-Eleven and sees a hot dog there that says it's $2 and then says, yeah, I'm going to buy that. And then you get hit with a 50% service fee for, someone taking the hot dog out. Like, sure, you can tip if you want to, but like that's different. This, to me, is an example of slimy, shady pricing, and I think it's exactly what the FTC is built to deal with. Is it like the biggest problem in the world? No, but it's not like any legislative effort was spent doing this. You didn't have people running around legislating it. The FTC is an agency that specifically is built to weed out unfair trade practices. And this is kind of slimy, shady stuff. And I don't know why anyone would be like, no, like businesses should be able to hide fees. Like, this is the question. If you think this is government overreach, what's the what's the upside to a business being able to hide fees until the very last minute on you? Like, why is that a good thing?
I would be hard pressed to find anyone to make that argument.
You know, with some of the other stuff, you can say, okay, like here's the one that we were talking about a couple weeks ago with airlines, where senators were like, hey, you're making all these add-ons for, if you want this seat or if you want a bag to be checked. Okay, well, that's a la carte pricing, and ultimately you can still choose what you want, and it's just how do you want to end up paying for that. This, it's, no, you need to pay it, and we're going to hide the price until the very last minute. That I understand the positive to a la carte pricing, which is if I don't need to check a bag and don't care where I sit, I get a cheaper seat. That's the benefit to that.
Right.
What's the benefit to Ticketmaster hiding a 50% fee until I go and
hit buy? They're psychologically manipulating you to get far down the process to where you're pot committed at that point.
Yes.
And it beats you up. It's happened. I mean, everyone's had it happen before where you're
totally.
Like, all right, me and a group of buddies are going to go to this game, or I'm going to get concert tickets for me and my wife, and this is what it's going to cost. It's $150. And then you just have that in your head, you're like, okay, I'm fine spending that. But then it jumps to that next year, and maybe it's on the higher end of your pricing tier, like $150. That's as far as I'll go. And then you're like, oh crap, it's $200 now when it comes to total. But you're already visualizing, oh, we'll get a babysitter or whatever.
Be there, yeah.
We're gonna get dinner at this restaurant, whatever, and they have you, and it's just psychologically, it's not the right thing to do. They know they have you, so they try to stick a little extra margin in the end. Better to be upfront and transparent. It's hard to argue against not having transparency.
And the counter to it is last week. So I'm a big Better Call Saul fan. Bob Odenkirk.
Mm-hmm.
He's going to be down in New York for I think 2 months or 3 months next year.
Glenn
Ross. Tickets went on sale like a week or so ago, and I was like, okay, like I really want to see him in this. It's also got Kieran Culkin from Succession that's going to be in it. And I was like, okay, I need to do this. So I'm looking around at the ticket price, and I'm like, oh, these are like a little higher than I wanted to spend.
What are we talking? That's
like,
going to be like $400.
No, so I got in for, I think it was like $130, $140.
Oh, that's not bad.
It's like, if you want to be like first 10 rows, you're paying like $500 plus. But as you go back, even in like the orchestra section.
Bill Burr's in that too?
Yeah, Bill Burr's in it also.
Michael McKean, there you go.
Yeah.
Sorry.
But so I was like, okay, like, where's it going to be? Like, and I'm hovering over the seats, and I realize, the prices here, it says, $80 plus $40 service fee. And I'm like, okay, yeah, the service fee is 50%, but it's already included in the price I'm looking at. This is great. I don't have to plan for something after, which is nice. So I am all in favor of, hey, if a fee's mandatory, no, you shouldn't be able to hide it until later. If you're doing something a la carte like airlines, I might not like it if I need to buy all those things after, but there are plenty of people who don't, and they get cheaper prices because of it. So there's an actual plus to the a la carte. There is no plus to just hiding a fee that you're going to have to pay anyways. Quick break. We got, what do we call it? Stack roulette after this.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network. If you're retired or nearing retirement and haven't done your planning yet, you could be missing out on opportunities that can save you thousands of dollars. Cushing & Dolan are experts in elder law and taxation, and they have a new guide out this month called Balancing Asset Protection and Avoiding Estate Taxes. Early estate planning can have many benefits, especially if you want to protect the assets. But there's another big advantage. Doing your planning the right way might also help you eliminate your estate taxes. Learn how to keep your assets in your family and avoid probate. Get Cushing & Dolan's brand new guide called Balancing Asset Protection and Avoiding Estate Taxes. Call right now, 866-848-5699. That number again is 866-848-5699. Or you can request your guide online from our website, LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way, so whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Financial planning is a year-round job, and with 2024 coming to an end, now is the perfect time to take a hard look at your strategy and what changes you may want to make going forward. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide may help you understand some key numbers that could affect your planning next year. There are many important topics to review, like marginal tax brackets and retirement account income limits. If you're retired or getting ready to retire, the guide also focuses on the many ways that the government taxes your Social Security benefits. Take the time now to reflect on your current strategy so you can be fully prepared for any adjustments you may want to make in the future. Get your copy of our new guide, Key Numbers to Know for 2025, by calling 800-393-4001. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John. With winter on the way, now's the time to start looking at a fabulous holiday vacation. And there's no better place than the U.S. Virgin Islands. Enjoy perfect weather, world-class dining, incredible beaches, and a vibrant nightlife. No passport is needed, and there's no money to exchange. Take your next vacation in America's Caribbean paradise, the United States Virgin Islands. Go to visitusvi.com to book your trip. That's visitusvi.com.
Paul, what do you got for me?
With sports gambling surging, the federal regulation is being discussed. This is a piece out of the New York Times. So back in 2018, the Supreme Court overturned a federal law that banned sports betting outside of Nevada. It now is legal in 38 states, and we're going to have the District of Columbia and Missouri also joining that in 2025. It is now the Senate has gotten together to discuss the possibility of national regulations on the sports betting industry. It is estimated that $30 billion were gambled on sports last quarter. It's become a really huge industry and has kind of surpassed any expectations for even those in the gambling space in terms of the estimates of gambling out there. And the comment that I just want to throw in on this is that I do feel as if there's probably regulation due on the the advertising side of things, where I believe it's sort of been the wild, wild west in terms of prop bets and other things of the nature that are really like lottery tickets when you try to string together 5 or 6 outcomes and they're promoted by the biggest stars, Gronk or, whoever else out there. There probably does need to be some legislation. I've heard anecdotal stories of just people going beyond their means on these type of endeavors, and that's typically the way it works in this country. Is an industry gets open and then regulation falls, and it seems like that is going to be the case here. Again, this is just discussion. Charlie Baker was actually part of this hearing where he's at the head of the NCAA, and he's focused significantly on not having prop bets attached to individual players. So if you think about this, you have an individual college athlete where someone can gamble on, how many points do they score in a basketball game like Cooper Flag at Duke, for example. The hatred and sort of vitriol that they can receive on the ends of those type of player prop bets make it not as tenable for what were formerly amateur athletes. I guess you could kind of debate that today with the NIL money, but
Sure.
still, young athletes.
Yeah, so a couple things. First, a statistic. This is from sportsbookadvisor.com, I guess, did this study. And they found that in a 2-year study of online bettors, 11% of them ended up with a profit. And the average winnings were less than $150. So generally, if you're betting on sports, you're losing. And worse, 80% of the revenue came from 10% of the gamblers who just kept losing over and over. And those are the ones that keep getting like, hey, do another free bet, or hey, we'll comp you at, one of our in-person locations or something like that. So I'm not opposed to sports betting. I never have been, but I do think with the mobile apps for it, and the lack of guardrails there, it really creates a problem for people that end up addicted to it, in that it's just like it's too easy. I think where I've kind of landed, and Tucker, you're more involved in this world than I am.
Yeah.
Look, if you want to have an actual sports book in every town, I'd probably be okay with it. Like I might not love it, and I wouldn't go there myself just because I'm horrible at it. Like I tried putting like $100 in.
Yeah, but you can still go to a sports book and not gamble. It's
you just go and watch the game and order
a
bunch of food or something. Whatever.
Right.
But I really am not sure that having it on everyone's phone is something that we should be allowing. I just don't know.
I love the convenience that is on the phone, but I think you could find a middle ground approach of putting in guardrails specific to online accounts, where they kind of do that.
Well, here's the problem: is if the other thing, I know a couple of people who are professional gamblers. Mm-hmm. It is what they do. And the online sports books have basically cut them off from making money because they're too good.
Yeah, they cap them.
Right.
Like they can't make any meaningful money because they're too good.
I know somebody in that same camp, Chuck, where they couldn't make it got to a point where they couldn't make $100 bet.
Yeah,
they're like, nope, we're good.
They can't do it. And the casinos are really like, you can't spoof accounts, and you can't do it. Like, you can't get around them. And so I guess it's a rigged game is the point. Like, it is. I mean,
yeah, you have to view it as a source of entertainment. If you're going into it, it's an entertainment thing. It's not. You shouldn't be going out there thinking you're going to make a profit. Make a substantial profit. It's for fun.
And there's also something, and this is popping up more and more. I mean, this idea of just kind of financial nihilism, which is, hey, I'm screwed financially, so I'm just going to throw it at this or that, whether it's, some stock that I'm being crazy with, or, all my money on, some athlete making X number of shots in a 42-way parlay or something like that. You got some of that going on, and it's kind of ugly. And again, I don't think that sports gambling should be banned because, it's still going to go on anyways. Like, talk to anyone. It was going on even when it was banned. Yeah. Like, it's not like that's a thing. But we need to find a better way to do it, and we're not there right now. It just we got to figure something out on this, because It's getting kind of ugly. Speaking of the opposite of ugly, the Oscar Mayer hot dog driver.
That time of year.
It's that time of year.
I was going to say, I've seen this.
If you want to be a hot dogger for Oscar Mayer, you can be driving the Wienermobile. So now through January 31st, they're giving you the chance to apply to be the Wienermobile driver for the 38th class of hot doggers. It's a 27-foot-long hot dog on wheels. And listen, you get to drive it all around the country. No one ever gets upset when they see a giant hot dog coming down the road. That's all I know. So, this is something where if you're interested, they're going to have 12 applicants who end up making the cut. And they got their stuff all over the place on their Instagram and TikTok. So if you know a kid looking for, a little bit of summer fun, hey, you could drive the Wienermobile next summer. Applications open through January 31st. We're done for the day. Back at tomorrow, we'll recap what the Fed does,